What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 11th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about a certain tool or method that I utilize in order to stay ahead of the market and make sure I'm positioned in some of the best assets that are leading the way. And again, I think this is very important to keep in mind because many traders out there, a lot of educators don't really talk about this. And in many cases as well, you might already be utilizing this technique. So we're going to be talking about this and more right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you holding Bitcoin and digital assets long-term like myself, why not put it to work? Ledn works with Genesis, the most established institution in digital assets, to give its retail clients access to a suite of institutional-grade services to manage their digital wealth. Their savings accounts let you earn up some of the best risk-adjusted rates on your digital assets, such as 10% on USDC and 6.5% on your Bitcoin. Their B2X loan service allows you to double the amount of Bitcoin you own through a Bitcoin-backed loan. And if you sign up today, you can get over 250,000 Satoshi bonus if you register with the link below to get a loan today. Alrighty, everyone. So I want to go ahead and kind of preface this conversation here. Obviously, right now, it's a very exciting time. There's a lot of noise, a lot of buzz with cryptocurrency markets. We can see here, just looking over the last 24 hours in the top 100, there are multiple different plays that are in double-digit territory, and many of which that are still in the green. And this is, again, after a kind of sideways period after multiple weeks where day by day, cryptocurrencies were in double-digit territory. And along with that, gold and silver doing phenomenal. So as we're in this environment here, I want to go ahead and spend a little bit of time as to how I position myself to hold on to these leaders, know which plays are coming up here and looking like they have a valid opportunity for me to take upon as a trader. So again, it's one thing to just basically, trade off Bitcoin here, but there's something that I like to use called ratios. Okay, now ratios are very simple. It's basically comparing basically two different types of assets, in this case against one another. And interestingly enough, if you really want to kind of get down to it at the end of the day, most market pairs are a ratio. Bitcoin to USD is a ratio in a sense. When, for example, Bitcoin goes up against the dollar, this means that for every Bitcoin, you can basically buy more dollars. And on the vice versa end, if you, for example, see Bitcoin going down in price, you can buy more Bitcoin with your dollars. So this is something just important to keep in mind, just to kind of get that theory of, okay, which asset is outperforming one another, right? But I want to dive a little bit deeper here and to talk a little bit more about, how to use ratios in practice. So here's a great example here, one that we mentioned in our newsletter over this last month as we were focusing on a lot of the large caps starting to lead the market, a lot of the larger enterprise blockchain protocols really starting to lead the way. We looked at Tezos. Now, you could look at Tezos and its Bitcoin pair. That's technically a ratio. You could look at it in US dollars. That's a ratio. But I really want to focus on using ratios in a more creative sense, comparing altcoins like Tezos against other similar altcoins. And, generally speaking, the broader altcoin market is doing great right now. So you need to go layers deeper and see which ones are outperforming one another. And what's nice is that we have a lot of price action and history to work with here. So this is an example of a ratio here. We're actually very fortunate here. Kraken actually has a pair here for Tezos against Ethereum. In many cases, what you have to type in this case is, let's say I know Tezos, for example, some of its longest price history is on Bitfinex. So I would type in Bitfinex, and then I would type in XTZ, and then I would do a divide symbol, or basically a /, and I would, in this case, if I'm doing Ethereum, maybe I want to use Bittrex, because I know Bittrex has a long price history, ETH BTC. Now again, the BTCs, I apologize, I forgot to mention it back here, BTC. So basically the BTCs cancel each other out, and this gives us a unique pair here where we can take the long-standing history of the trading pairs for these currencies and make a custom ratio. But in this case, we don't have to do that, right? So again, the major thing there is to focus on the exchanges for each pair that has the longest price history and decent liquidity, but along with that as well, the actual base pairs in this case. And look at that, we've got ourselves a ratio here. Now, what we wrote about in the newsletter here was that we had basically what appeared to be a 50% discount of Tezos against Ethereum, as Ethereum was having a killer bull rally here and Tezos was pushing relatively sideways. And what we noticed is that price was coming down here towards previous resistance in the past. Now, as many of you know, I like to promote the idea, as many traders do. This is basically a philosophy of naked trading. And don't worry, I'm not naked now, I'm wearing clothes. It's a little bit hot where I'm at, so I might have to take my clothes off in a bit. But in all seriousness here, with naked trading, we're not really using many indicators here. We're just focusing on price, support, and resistance. And it tends to be that previous resistance becomes support. We saw it back here. This is basically how I actually spotted it here, is that over the past we'd actually built support here and had a rally at Tezos against Ethereum. So as this is going up, this means that Tezos is outpacing Ethereum. It doesn't mean that Ethereum is going down. It just means that if Tezos is outpacing, or XTZ is outpacing Ethereum here, okay? So we can actually see this not only working great here. We made a trade here, buying on the lower range for Tezos, and we're already well up on that trade, far beyond what we would have done if we just held Ethereum, which has been one of the major market leaders. But outside of this as well, we can use this in traditional markets. One of the most common examples of ratios in traditional markets is the gold to silver ratio. Now, we had talked about how, again, at the beginning of each commodity cycle, before you actually get it, you're going to get a spike up of gold against silver. So again, this is a ratio, just to visualize it. If the ratio goes up in value, it means that gold is able to buy, 1 ounce of gold is able to buy more ounces of silver. So the current value right now is 70.9. Let's just rough it off. Let's just say it's 70. This means in this case that 1 ounce of gold can buy 70 ounces of silver. Very simple way to think about it. And as we see the value go up, this means that at the peak up here, I was able to buy 125 ounces of silver per 1 ounce of gold. But now what we've seen as we enter into a bull market for precious metals, silver tends to lead the way. And we've had a sharp pullback in this case. And as we started to see silver outpacing, this was a clear signal to us to go long on precious metals. And again, silver's been doing phenomenal here, right? When we got this discount opportunity in March, we were screaming to the hills alongside our cryptocurrency positions that silver this cheap was going to be a really stellar opportunity. And so far, we haven't been this high here for silver since back in 2013. Silver's playing catch up and it's coming in big time. So it's just really interesting to see how ratios can come into play here and give us a lot of insight. Again, we have our aggregate indicator here like the SMS indicator, but we don't really need to use it here. We just simply use general support here when we analyze the price, right? We did some basic TA here on the commodities on the long term, and we looked at the ratios. When this was way overextended to new historical highs, it's a pretty safe bet here to go long on silver. Now, we can also do something else as well, which is pretty cool. We can do ratios of commodities versus broad indexes of equities, stocks at the end of the day. So this is one that I basically had written about in the newsletter for a long period of time to demonstrate how I know many people were saying, oh, I'm long equities and I'm doing great. Stock market's on an impenetrable rally. But to be fair, actually, silver actually was slowly but surely beginning to outperform equities back in the summer of 2018, just like it started to do back here in August of 2000, right? Very similar beginning here, going out to the end of the summer these years and slowly setting in these kind of higher lows and higher highs, and then initially kicking off the rally here. This time around, we've had an even bigger acceleration for silver. It's been one of the biggest breakouts we've seen in a long period of time. We can see the same thing here with gold, right? Again, ignore really the numeric value. It really doesn't matter. Focus on how it is performing. If basically you see the ratio going up over the long term here. This is the 3-month chart. So each of these candles is 3 months. So again, these cycles can be analyzed very easily over longer term time frames. If this is going up, this means that gold is outpacing the S&P 500. Doesn't mean that the S&P 500 is always going down. It could mean that, but it's likely that it just means generally that I would have been better positioned right here from 2000 going all the way here to 2011. I would have generally been way better off just holding gold versus the broad index of the S&P 500. And as we enter into the macro environment we're in right now, where central banks are printing excessive liquidity, we need to search for assets that are performing well, but also, again, where we can see ratios giving us an idea of, okay, look, this asset's performing well. How is it performing against others, right? Well, broadly speaking, if you just want to compare it at surface level, Bitcoin versus other assets, Bitcoin is by far the best performing asset of the last decade. Having multiple years of, whether it be, for example, not only the vast majority of its years being green, which is phenomenal to see, only really 2 serious years where we had downward price action. But along with this as well, you have these crazy multiples on Bitcoin. Some years where it's gone, 55, almost 55x in this case on price. You can see, again, massive moves here for Bitcoin in the past. And even if it's not one of these big breakthrough years where we really kick into the bull cycle, which If you can take a look at the chart here, it's probably going to be in 2021 and 2022 where we get this kind of price action. Still, the performance here, 94%, 66%, this is the kind of stuff we want to see here. So you can use this for small of things such as altcoin trading. You can use it for comparing cross-market. You can do this with stocks against one another. You can do Tesla stock to, whatever company you want to do, Amazon, whatever it may be. Right? So this is a very valuable tool for people to start using. And what's great is that even though you can't, on the free version of TradingView, you can't save these symbols, you can write them down, type them in, and you can actually get these ratios. You just can't get the intraday data. So you can do daily, weekly, monthly, and that's really all you need. You don't need to do the shorter time frames. So anyways, it's a free tool. You should check it out. You can do it through tradingview.com, as you can see the link up here. Now, I want to go ahead and talk a little bit about, the news here, guys, that's been going on. This is stepping out of the ratios a bit, but it actually will kind of tie back into that. So stay tuned if you're interested to kind of see my take here of how I'm using ratios as a macro trader. So recently there's been some big news here around Tencent. As you all might have heard about the geopolitical issues in here, in the United States around Tencent's TikTok app, in this case, as well as WeChat. We're basically starting to see a big divergence here where people are starting to be very worried about a lot of Chinese tech plays, because if they're banned from the United States, this will cut a lot of the market share and will actually start to maybe hinder the company in some capacity, right? So you can see here Tencent's been doing phenomenal as a company, right? We've been seeing here as well that the broader tech market as well has been doing well. Apple almost nearing a $2 trillion market cap after already breaking $1 trillion back here in 2018, right? Back here, we were really just at around $1 trillion valuation back here in March, and now it's almost a $2 trillion company. Again, Microsoft, 1.5, nearing towards $1.6 billion company, going eventually, hopefully, I think as many investors are hoping, for $2 trillion and market cap. Amazon, exact same boat as Microsoft. Take a look at the market cap here. Practically the exact same, very eerily similar, eyeing that $2 trillion market cap, right? The performance here has been phenomenal, but as we take a step back here again and look at the broader equity comparison for commodities, we actually see that commodities have been winning out. Now, maybe if you compare FANG, right, if you compare these tech stocks, maybe it's a different picture, right? But what you have to ask yourself as a macro trader is you utilize ratios and you utilize, comparing different types of asset classes like Bitcoin and cryptocurrencies against precious metals, against equities. The thing you should be thinking about is, where are the ratios showing the best performance? And along with that as well, is this nearing towards the end of a cycle for a given ratio? So over the last few years, commodities have been doing extremely poor, really, especially over the last decade. It had been basically a silent decade for commodities such as gold and silver and a lot of industrial commodities, as we started to see equities soar to new all-time highs. But are we at that time where we're going to start to see a seismic shift here? Are the ratios themselves showcasing to us these technical patterns that break out on a multi-month basis or multi-year basis? Are they starting to show us here the precious metals and other hedges such as cryptocurrencies like Bitcoin are starting to outpace the broader asset market for equities? I very much think we're seeing that right now. And this is, again, how ratios can provide that kind of perspective to you as a trader, to cut out a lot of bias, to really just focus on what's winning in the market. And again, seeing where that new shift is beginning. If you look at any of these assets, Bitcoin, gold, silver, they are broadly outpacing the FANG stocks, broader tech stocks, the broader stock market as a whole. So where are you going to position yourself over the next year or so? That's a question you're going to have to answer and determine for yourselves. But as you all know, I'm very well exposed to crypto. I own a little bit of gold and silver, not much, but my main allocation here is to crypto because I know the chance of this market to scale out long term and to grow as a market with the kind of multiples that it's shown in the past in the sense of return. All right, I rambled on enough, guys. Pretty lengthy video, but I thought I would rehash on this piece here. If you like this video, drop a like. If you want to learn more about, how we utilize ratios, we not only do a lot of free content here on the channel, guys. You guys know I'm always big about, sharing content, democratizing it, opening it up to people. But if you want to support me and you want to kind of get some more market insights, not just on crypto and everything, we have the Dash Report, which has been growing like wildfire recently. We've got a lot of people signing up, so it's down below in the description if you want to register for that. But outside of that as well, if you guys are looking to get involved in cryptocurrency markets, you can always check out, the channel here. We've got lots of great content. But all in all, if you can just subscribe, hit the bell icon, and stay tuned for the next video, it'd mean the world to me. It's a true privilege to be here with you guys throughout these exciting times, and I'll see you all in the next video. Stay tuned.